show, we have with us the man himself, Jorge Abreu. George, how you doing, man?
I'm doing good. Excited to be on here.
Yes, likewise. Guys, George is crushing it. I've been following him on LinkedIn and many other places. He just is on a roll. So I'm really excited for today's episode. A little bit about George before we get started. He's the CEO of Elevate Commercial Investment Group and has been investing in real estate for over 14 years now. He started in single family, moved his way up to small multifamily properties, and has wholesaled over 200 plus properties, fixed and flipped over 100 properties, and developed several new construction projects with over $8 million in new construction. George is currently an active and passive full-time multifamily real estate investor and has 1,720 doors on the GP side and 1,400 plus doors on the LP side, with another 850 doors under contract as well on the GP side. He also owns a construction company, JNT Construction, that focuses on helping multifamily investors with their full renovations. And I love that he put this in his bio. His goal is to reach 10,000 doors by the end of 2021 by creating strategic partnerships and implementing the proper systems in place for scalability. So with that amazing rap sheet, George, let's just dive right into a little bit of your background.
Sure. So thanks for the intro there. But yeah, so I started this journey of real estate investing. It was about 15 years ago now, studying to be electrical engineer in the university. Back then I was in Miami. I'm originally born and raised in Miami. Now live in Dallas, Texas. But when I was studying to be an engineer, I kind of realized at some point that I didn't want to be an engineer. I was just really good at math, and that's kind of what made me go down that path. And doing that, I started looking up other successful individuals, and I kept going back to real estate investing. At some point, you know, these wealthy individuals had either gained most of their wealth through real estate investing, or once they became wealthy, they were putting a lot of their money towards real estate. So I really started digging into that. Did end up graduating with my electrical engineering degree, and I went to work at UPS in the engineering department. But while I was doing that, I was doing some real estate deals, and I finally felt like I was getting enough consistent cash flow and just from the transactions, the real estate transactions, to quit my W-2 and start doing real estate full time. Not sure if I mentioned, but I started with single family investments, did a lot of fix and flips, went to scale the fix and flips, and that's when I decided to open the construction company because more control. I got burned by a general contractor, and
I think anybody that's been in real estate for a while probably has. They know the feeling.
Yeah, especially if you want to do, we were doing 40 to 50 flips a year, it's going to happen. So at that point, I decided to bring it in-house and started creating my own procedures and whatnot with the construction. And then maybe about 3.5 years ago, I kind of looked back at everything and I realized that I hadn't quite created that wealth I was looking for, and a lot of it was because a lot of it was transactional, from one flip to the next. I hadn't really built that much of a portfolio. I did have some smaller multifamily and some rentals. Got rid of a lot of those as well. But I started looking more into multifamily, and I had already started turning my construction company, pretty much other than doing our single family homes, our construction company was doing just commercial and multifamily. Just because I had started to realize working with those clients was a lot easier than working with single family.
Yeah.
So I got to speaking to some of my multifamily clients and realizing what a syndication was. Before then, I didn't even realize that you can syndicate a deal and put other investors' money together and take down a large multifamily property that way. So as soon as I realized that, I really started to dig into multifamily, and a little bit after that, I decided that I was going to shift my focus from single family investments 100% to multifamily. And, that's what's gotten me to where I'm at now.
Was that like at one turning point, one specific turning point where you're like, all right, no more single family from this point forward. It's 100% multifamily. What was that turning point like?
Yeah, first it was, okay, I'm going to do both. I'm going to do the single family, I'm going to do the multifamily. And I did that for maybe 6 months or so. And I realized that I was just spread too thin. And I believe I had read the book Traction around that time, and
great book. I saw it right behind you.
yeah, it's there. It doesn't specifically talk about focus and whatnot, but there was a chapter in there that spoke about that, and it really hit me. Like I was implementing the EOS system in our construction company and getting ready to implement it in our single family and multifamily. But I decided that was it. I was just going to do multifamily, and I stopped doing single family altogether at that point. Started, sold off what we had, and went all in.
I love it. So walk us through kind of your decision-making process to go to multifamily. Of you said you weren't hitting the kind of the financial goals that you wanted, and it was more transactional. What was your kind of like aha moment for multifamily?
When it was when I kind of started breaking down how much time was spent on some of these single family projects. Even if at the end of the day, at closing, we ended up with a $40,000 or $60,000 check, the process to get to that, and the time it took, and the energy, when I started, taking that and comparing it to the actual profits made, the profits didn't seem so big anymore. And I think it's as soon as I did that, I realized that instead I can be putting that same energy and time into multifamily. That's going to pay me out through cash flow, through the exit, all these different streams of income versus the single family, which you only get paid when.
Yeah. That's very true. I think that's one of the powerful things about commercial real estate in general, but multifamily is there's so many different avenues of making income and building wealth that not only are you having a bigger impact, but you're also being able to create more streams of income. And people talk about, wealthy people have, I think it's like at least 11 streams of income. You can almost get, 4 or 5 streams from one property. In essence, because of the different avenues you can go about it, and like what you're doing in the vertically integrated space where you can have the construction, and if you add in the management, and even on some developments you can add in the architecture and the civil engineer, and there's so many ways to get vertically integrated, so you can, in essence, the project can pay you multiple times.
Correct.
And so what for you, walk us through that the first few multifamily deals and what that was like.
So before even getting to that first one, it was a lot of underwriting. I want to say rejections. Well, yeah, I guess because the offers we were sending were not, getting accepted. So yeah, there was rejection there. But
how many offers do you think, if you had to ballpark it before you got your first one?
Exactly what I was trying to think of right now. It would have to be at least 100. At least. We've come up with better systems now where we don't waste so much time on some things. But back then it was just wanted to underwrite things and learn at the same time. So we finally got one that penciled up, and then at at that time, I had really good experience with construction, obviously, good experience on locating deals, and doing everything to that point. The one aspect I really hadn't done was raising equity. We had a couple lenders on the single family, and they weren't willing to jump over to multifamily. Like, they knew single family, that's what they wanted to stay with. So we brought in a CoGP that was their specialty, and they also helped with the track record and getting the loan, signing on the loan. And we took it down together, and that's how we got the first one.
Yeah, it brings up a good point. Is usually, especially at the beginning, it makes such a big difference to bring in experienced partners. It just accelerates the process, because you're going to fight an uphill battle with lenders, with equity partners, if you're trying to do this 100% on your own and you don't have that experience necessarily within the multifamily space.
For sure, and that was the goal. I definitely wanted to accelerate and scale quickly with this. I had started from scratch with the single family, and I knew it was a process, and definitely doable with multifamily, but it would take longer. So it's been one of our models, is to co-GP and bringing other partners that have aspects that we don't, and leverage that as they leverage what we have, and do it together.
So since you've been in the multifamily space, what do you think has been one or two things that have really led to your immediate or like very substantial success?
I think one is definitely putting myself out there. Going to every single networking event I can go to, pretty much documenting everything I'm doing on social media, and letting everybody know that, hey, this is what I'm doing and I'm serious about it. I think that has definitely helped, especially finding those partners. The other thing is focus. I talk about that a lot, but if I was still trying to do the single family and the multifamily together with the construction company, all trying to build them all at the same time, it would be rough.
Yeah, I think that's all awesome points. I think I've heard a great coach of mine say that he's basically like, you can do everything you want, but you can't do it all well. And it's so true. It's, we, especially entrepreneurs, we have this drive. We're like, oh, I could do this. And, you get business ideas like every day. But you have to have that like blinders on to remind you that, hey, I've set a goal for myself of being the best at X, and I need to make sure I put the vast majority of my energy towards that. And I'm solely focused on that, because, you can be, like you said, you can be pretty good at 3 to 4 different businesses, but building out one that's the best is hard.
Yeah, I agree.
So what from those first few deals to today, and you have the 850 unit portfolio, which we'll dive into in a minute. I want to know more about that. What from that scale point over the last 3 to 4 years, what has that been like to be able to grow to, you said 1,700 doors on the GP side and 1,400 on the LP side. How have you been able to scale like that?
I think it's been what I already talked about, being willing to partner with others and bringing in other co-GPs. And then at the same time, internally, when I started the company Elevate, I told myself I was going to build it more as a business from day one versus, treating it more like having myself do everything and only be able to grow as much as I can handle.
Yeah.
So I've been implementing, SOPs for everything. I've been bringing in team members and building it to scale from day one.
I like that. Yeah, it's so important if you actually have that big vision for your company and yourself to not just treat it like, hey, I'm a bootstrapping entrepreneur doing it myself. You got to think about it like, hey, if I were this, elevated version of my company and myself in the future, how would they handle this problem today? It sounds like that's how you approached it from day one. When you were bringing on those team members or building out those systems, what came first? Was it the systems? Was it the first hire?
No, I mean, I would say a little bit of both, doing the work, bringing in the deals, underwriting, while still building the system at the same time. So like every time, if there's something that we're doing and we realize that we don't have a system for this, or we don't have a checklist, we make note of that and we make sure we go back and we create that, so we don't find ourselves doing the same thing over and over without having a guideline for it.
Yeah, that's something that I constantly have to remind myself as well, is like, hey, wait a second, all right, I don't need to be recreating the wheel every time I do something.
Yep.
And also to repeatability, so other people can do what I now know how to do without me having to teach them every single time.
Yeah, I think that's one of the hardest parts, man. From a small business to a larger scale company, it's hard to stop and work on your business and do those kind of things.
Yeah, I think we sometimes forget about that. We're in the go mentality of finding the next deal, closing the next deal, raising the capital. Yep. And sometimes forget that we're just, kind of moving slowly in one place if we constantly just add more to our plate and not add more plates to the table.
Correct.
So let's dive into your team and building out that team. Who came first and what did that look like?
So I mean, at first it was me and my partner, Eric, and so at first we were splitting roles and responsibilities. I've always been more of so I was also partnered with Eric on the single family. So we've been business partners for a long time, but I've always been the visionary type, and he's always been more of the day-to-day and implementing the different functions. So we did a good job of splitting that in the beginning, and then we realized where we had our gaps as we continued to grow. At first we realized we had a gap in acquisitions. If we wanted to find more deals, be able to underwrite more deals, so we brought somebody in to help with acquisitions. Then after that we realized we need more help with investor relations and also raising equity. So then we brought someone else in to help on that end. And right now there's 4 of us. I've got, we also, I guess 5. We have a virtual assistant as well now who does help with our marketing. So that was kind of the next thing. Okay, we realized we had a gap in marketing. So we've been trying to not, when I say build the company to be able to scale, I don't mean you're going to hire 20 people from day one. You've got to separate the roles, and then when it outgrows the team you have, you've got to be able to fill somebody to take over, and that way you keep growing naturally, organically.
Yeah, I really like that. It sounds like a bite out of the EOS and Entrepreneur Operating System traction, how it's building out kind of the org chart, and then eventually, once that person has too much on their plate, finding that next role.
You got it.
So how much have mentors and education like Traction played into your success in your building out of your businesses?
Man, it's been huge. I mean, I'm always listening to audiobooks. Whether it's business or self-development or financing. I'm always listening to something. I'm always willing to learn and implement new ideas, or not really ideas, but things that I learned from these books. Same with podcasts. I listen to a lot of podcasts. I did get a coach when I started the single family. I did get a coach when I started the multifamily. I have had an ongoing coach as well in the past. That again, just to help with that accountability. And I think it's massive. Without doing that, I don't think I would be where I'm at for sure.
Yeah, that's same for me too. It's a game changer when you first dive into, self-development is one thing in and of itself, and then also you layer on the coaching, accountability, even some mastermind groups. You just add that on top, and it's a game changer.
Yeah, I definitely think you gotta win up here first. Make sure your mind is set right, and then also get educated on whatever it is you're gonna pursue.
Yeah, and I love how you brought up earlier about the going to all the conferences, the networking, being known, like getting yourself out there. How has that really helped your business? Because I think you're spot on. I think I have seen you everywhere. You've done an excellent job. Like, kudos to you because you've done it well. So how has that helped your business, and how could that help, like, for our Monumental listeners?
Yeah, no, it's massive, man. It helps build that credibility, one. And then two, it just opens the doors to meeting so many different people. You never know, man. All the CoGPs and partners that I've got in my deals, I've all met them because of that. I was either at an event or through social media or something. But yeah, you can do this business without doing that. You can, but you're gonna have to have those relationships some other way. Either maybe you were in some type of part of the business before, maybe in property management or the equity side or something. But if you're starting from scratch, you've got to put yourself out there.
And how, what have you found has been like the best way? Has there been one channel? Like, is it in person from conferences or Instagram or LinkedIn, or is it a combination of everything?
I think it's a combination. So the social media, I think, is more of a branding in a sense. So people just know who you are and know what you do. But then when you meet them in person and they already kind of know about you or know what you do, it just makes that so much easier.
I agree.
And kind of take it to the next level when you meet them in person.
Yeah, it's basically like a warm introduction.
Yeah.
It's like almost like a friend. Once they see you enough and they start to like you, they come up to you with a warm feeling before they even know you, before they've ever met you.
Yeah, and I think that was huge for me. I'm not I'm very reserved, at least, or I used to be. I've gotten better. Naturally, I am. And that really helped, going to these networking events. I would usually, take my time going around the room and meeting. But, at some point when I realized it was working really well, I literally had people lining up or, coming to see me, and I'm like, okay,
you're like, hey, this This is different for a reserved guy.
Yeah.
That's funny. That's awesome. What is that like content creating marketing process been like for you?
It hasn't. I've always been really good with marketing, or I've always at least had, a good eye for what needs to be done with marketing. I think the hardest part has been just putting myself out there, with the videos and whatnot. They're not going to be perfect, but I think that's actually better than a perfect video that nothing goes wrong. And yeah, I mean, other than that, taking the time, that was really tough at first. Because like you said, we're in the day-to-day and the grind.
Yeah.
And you've got to do it, you've got to slow down a little. You can also implement systems. I mean, I've got systems in place where our VA does a lot of the stuff. But I mean, I still I comment to all my things, and I still do post a lot on my personal pages.
Nice. So you've gotten a point now where the VAs help some with the production, but you still handle some of the really like the direction and the voice of the posting. Correct.
Yeah. In the beginning, I mean, I was literally, doing the video, editing the video, adding the, transcribing it, whatever it was, I was doing all of it. So that tedious stuff is what I'm giving to the VA, and
Yeah. Same here. When I started the podcast, it was like I was literally doing everything. I was like, well, I got to learn this, but then I was like, all right, let's hand this off as soon as possible.
Yes,
because it is a lot of work.
It is, man.
Well, I love that you've really dove into the marketing side of it, because my fiance actually, she's the one that convinced me like 3 or 4 years ago. She's like, you should do a podcast. And then, now we are like 2.5 years later, we've done it. It's gained traction, we've gained a following, it's built a name for us in our business. And now I'm I'm shouting from the mountaintops. I'm like, everybody, market yourself, start a podcast, do videos, do whatever you got to do. Just get your name out there, let people know what you're doing. Because you're right. I mean, how can somebody want to work with you if they don't even know what you do and they don't know what you're up to? Sure. It just takes infinitely longer if, like you said, especially if you are a more reserved person, it takes longer to develop all those relationships at the conferences rather than just letting them know ahead of time what you're actually doing.
Yeah. No, I agree, man. For sure.
Yeah. So everybody listening, if you haven't already, start something right now.
Yeah. I haven't started a podcast yet, but I have, I don't know. I think this has been my 30th in like 2 months. Yeah. So yeah.
That's impressive.
Getting on other.
Well, that's the other side of it too. I mean, just getting yourself onto podcasts is itself a great form of marketing.
Yeah, I agree.
So I wanted to dive into the 850 units you have under contract. Tell us a little bit about that and how that came about.
Yeah, it's a large property, 850 units.
Is that one property?
It's one property.
Wow.
And yeah, we were out. So end of last year, we closed a 1,275 unit portfolio. After we did that, we decided that that's kind of what we were going to do. We're going to go after bigger things. So we were actually touring another portfolio. That was a 3,000 unit one in OKC. Well, it was actually in Texas and Oklahoma, properties throughout.
Yeah.
But as we were doing that, John, who does our acquisitions, he had been hitting up a broker for months now about this 850 unit property, and she kept telling him it wasn't ready to tour yet. But I told him, you know what? Call her and tell her we're here, man. We want to see it. Like, let's just do it. And he made the call, and we were able to get the tour in. So before it went to market, we were actually able to put it under contract because of that. And I mean, it's a great looking property. It's been a struggle with COVID. I mean, we were literally 2 weeks away from closing, and then that's when COVID went crazy. Man. Yeah. So our lender pulled out, and it's been a roller coaster since. Looks like we've been able to pull everything back together, and seller's been working with us quite a bit. So yeah, hopefully we plan to close on it soon.
Nice. That's awesome. I love how you guys were gung-ho enough to say, no, we need to see it now, and before it was actually listed.
Yeah, I mean, that's been a big thing to our success, is trying to lock things up before it goes into highest and best.
Yeah.
I feel like the highest and best thing really kills deals.
Yeah, it really kills any potential for return.
Yeah, we're strong about, you make the money when you buy. With multifamily, I mean, I think that's yes, but you've got to execute.
Yeah.
Yeah. I mean, we're pretty aggressive when we find an area and a deal we like. We go all in.
What about your main ways to source deals? How have the majority of the deals kind of come to you guys?
In the beginning, we took a lot of the stuff that we did for single family and kind of brought it over to multifamily, which we realized a lot of other investors weren't doing it in multifamily. So we were cold calling. We were scrubbing the data from CoStar and calling the owners. And we landed our first 2 deals that way. And then, after we closed our 3rd and 4th deal, seems like the brokers just started reaching out to us quite a bit. And we had that traction. So that made it a lot easier. But we still, right now, John we pinpointed an area that we want to be in, and he's doing that again. So
nice. What does that look like as far as, so you'll scrub CoStar, you'll create a list of target properties, and then John, your acquisitions guy, will cold call and try to get a hold of owners directly?
Yep.
Nice. Yep. And does he have like a certain quota of calls he needs to make or something?
We're setting up KPIs now with him on that. So I don't have the exact. Actually, I've got a meeting with Eric next week to pinpoint exactly what that's going to be. We had started doing that, and then once again we got crazy busy and kind of put it to the side. And John started helping with raising the equity and kind of we're trying not to do that anymore. Where everybody kind of stays in their lane, and but it's hard when you're a smaller company. You got to wear different hats sometimes.
Yeah, exactly. So it started out with kind of using the same methods as single family, cold calling, creating lists, and then eventually you built out a name for yourself, where brokers are starting to work for you. I think that's great for our listeners to hear. Is it doesn't just happen overnight. You have to do a lot of legwork at the beginning, but eventually, once you build up rapport and you build up a name for yourself as a closer and somebody that does what you say you will do, it goes a long way with brokers and property owners who, if they have a choice, like, well, this guy has experience, he closes, I'd rather go with more sure thing.
Yeah, I mean, just think about how many people are getting into multifamily investing, and how many of those individuals are being told the same thing by their coach to reach out to all these brokers. So, I mean, the thing that's going to make you stand out is once you start closing deals. That's what the brokers really want to see, or the owners want to see, that they can actually take it to the closing, and that sometimes weighs more than the price.
Yeah. Have you mentioned you've done a lot of CoGP or partnered with others. Do you do that on every deal, or is that just a case-by-case basis?
Case by case, depends on how big the deal is and what we need. But the majority we do, and I think that's what helps us. The fact that we're able to split the responsibilities, it helps us to continue to scale. I'm not sure if we'll take that away from our strategy at all. We may start taking more stuff down ourselves now that we've got the track record and the net worth and et cetera, that we don't really have to bring in anybody. But at the same time, I'm not sure if I would go away from it, just because then it also brings more responsibility and more onto just us. So yeah, we'll have to see about that.
And the benefit to the CoGP model is that sometimes, other partners of yours that could be CoGPs could bring deals, can also bring capital, can also, like you said, take on responsibility, so you're not biting off all the tasks of closing a deal, raising capital, asset managing, doing everything in between. So there are a lot of benefits to it, like you said. I think, and especially like you said at the beginning, it's probably one of the best ways to go if you can find somebody that has some experience to be able to partner with them.
For sure. I mean, I get asked all the time, how can I start, or how can I get started? And I always say, pinpoint what you're the best at. If you're good at raising equity, okay, well, that's going to be your strong point. Make sure you follow SEC guidelines of how to do that, but you can get into another deal if that's your strong point, or whatever it is. If you're really good at, you've got a lot of experience asset management, well, I'm sure another group can use that. So yeah, definitely.
And tell us a little bit more about so you have your acquisition company, you have your construction company. Do those two work together on deals, like when you do rehabs?
Yeah, so we hire the construction company out to do the work. And for the most part, our investors like that. Some people have told me, like, oh, isn't there a conflict there? And I mean, it not really. I mean, we're not paying more. If anything, we're paying less for the work, and we know it's getting done. And obviously, we trust the company that we're hiring to do it.
Yeah.
I've 15 years, I've built these systems and procedures on how to run a construction company. I don't know if you know this, but the statistics of a construction company lasting longer than, I think it's 5 years, is super, super low. So to trust someone else with a $10 million CapEx project doesn't make sense.
Yeah, I agree. There's way more vested interest, you as an owner, operator, to make sure it's done right and at budget.
Mm-hmm.
Tell us a little bit about, I know you mentioned you're getting more into new construction, ground up development. You said you're working on something right now. What has been the differences you've seen between the ground up and the acquisition? Yeah,
the difference between ground up and existing multifamily. I think one big difference is the equity you're raising. So the equity you're going to raise on ground up, they've got to know that they're not going to be getting returns for 18 months, 24 months.
Yeah.
I think that's probably the biggest difference, on as far as the deal and the transaction. I mean, obviously there's a lot of differences there too. Going from buying just land, depending on what phase you're buying that land, whether it's entitled or not, or if it's shovel ready or not. Definitely a lot more variables to land. I guess you could say that's another one. There's a lot more variables involved when it comes to land versus buying a C class or B class multifamily.
Yeah. Yeah. There's seems like there's infinitely so many variables, from the land to the construction to the lease up to all the different partners you got to bring in, to design the thing, permit the thing, build it. Lots of moving parts, but at the end of the day, it's a lot of fun, and you get to see something built out of nothing. I like to call it like the ultimate value add.
Yeah, dirt to building. Yeah, I mean, I like that.
But I agree. It's definitely like there's a re-education process if your investors are coming from the acquisition side, because it is a way different process of waiting for 1 to 2 years while everything's being built. There's no cash flow, nobody's renting. So do you see that as being a bigger part of your business going forward?
It's a good question. I see it as the next aspect that I want to tackle and kind of conquer. Whether, I love multifamily as far as existing multifamily, and I think, the cash flow you can get, it takes a lot less risk, I guess.
Yeah.
There's a lot less risk with existing multifamily versus new development. I've seen people lose money on new development. I've also seen people lose money on existing multifamily, but there's just more risk. I mean, that's what I can say. If the market turns, it's a lot harder to adjust with a new development than existing multifamily.
Yeah, agreed. As far as I saw one post you did on LinkedIn where you guys were putting in a soccer field on one of your acquisition properties. I really like that. I want to bring it up because I think that's really cool. It's like a kind of a unique amenity that I'm sure the residents are absolutely going to love.
Yeah, they can't wait for it to open, but yeah.
That's awesome you guys are doing that. So how do you guys kind of decide how to best serve the residents?
Yeah, so I talk a lot about CapEx, obviously, with having the construction company and knowing your scope of work before you actually close on the property and knowing exactly what you're going to do and having a plan. This is one of those things that we had a budget and we knew we were going to do something, but we didn't know exactly what. So we estimated a dog park. I had the exact numbers to put in the dog park and we had the vision for that, but we still had a question mark next to it because we want to make sure what we put in actually fits the residents we have and what they want. So as soon as we closed on it, we started taking a survey and getting our property management company involved. And as we did that and we got closer to being ready to build that amenity out, it was pretty clear that what they wanted was a soccer field. So that area where we built the soccer field was taken up by these huge satellite dishes. I don't know if you saw the pictures.
Yeah.
So you couldn't do anything there, but there's another patch of grass like on between some other buildings, and the kids literally played soccer there every day. And there was broken glass, broken windows every other week. So between the residents telling us and then between the kids actually playing the soccer there, it was just a no-brainer at that point. And I had been dying to do that. I had seen it at another property here in Dallas. So yeah, I was able to do both.
That's awesome. That's really cool. Yeah, the next iteration of that will be like little sprinklers up top to keep them cool while they play soccer in Dallas.
Oh, like a mister?
Yeah. I'm sure it's like 100 degrees every day.
Well, this is in Houston, which is even, I want to say hotter or at least more humid. So yeah, that'd be nice.
That's awesome. Well, as far as kind of any last words for our Monumental listeners of like how they can basically build out that life of impact and life of success that you've been able to create over the last 15 years. Any last words that we can leave them with?
Yeah, I would say find what you're passionate about, figure out what that is, then figure out how you can add value to somebody that's doing that at a high level already. And that's kind of your way in, bring that value to them. Be specific about what you feel you can do and what you can add to their organization. Start that way and then continue building from there. And then, once you've conquered that, then there's so much more you can do with the funds that you have coming in and how you want to give back and whatnot.
Yeah, I love it. Well, let's dive into our monumental questions. What does success mean to you?
Success to me means being able to provide the best possible life I can for my children, and also be able to spend quality time with them, as much quality time as possible.
That's awesome.
Whatever gets me there, to be able to do that, that's to me is success.
That's success. What about daily habits or morning rituals that you have?
Morning ritual, workout every morning. For sure, I've started journaling at the end of the day. I knew I had to do that and I kept putting it off. So I finally started doing that.
That's great. Yeah. Working out, that's been a game changer for me just last couple months. But then journaling, that same here. I'm like, I know I need to do more of that, but I keep putting it off. I need to pick it back up like you have.
Yep, it helps for sure.
What about favorite book or book you're currently reading?
Favorite book is Can't Hurt Me. That's more self-development, but it's a great book. And right now I'm reading Own the Day, Own Your Life. And you're just talking about daily habits. I mean, that's all about literally forget everything else, just own the next day, do the next day right.
Yeah.
It's really good stuff in there as far as health and other things as well.
All right, I'll have to add that one to my list. And David Goggins, Can't Hurt Me, a phenomenal book.
Yeah.
Well, George, amazing episode. I got a lot of value out of it. I know our listeners are going to love this. How can our Monumental listeners follow you or reach out to you or connect with you?
Yeah, quite a bit of different ways. So, they can go to my website, elevatecig.com. That's commercial investment group. So elevatecig.com. I've got a couple different free ebooks on there and whatnot. They can also email me if they like at Jorge, Jorge, at elevatecig.com. Tell me that they listen to this podcast, and I'll send them. I've got a couple different free checklists and questions to ask a sponsor if they want to invest passively. And then on social media, Facebook, LinkedIn, and Instagram. If you search my name, you should find me.
Yeah, guys, go out and look for George. He's really active on LinkedIn and Instagram. Those are the two ones I know. But go follow George. He's got massive value. He's doing amazing things in the multifamily space. Really, really just crushing it, and a great example for all of us out there looking to do the same.